Hello and welcome to our special broadcast, the GST Helpline. I'm Timsy, Japuria. The union government and states undertook a massive overhaul of the country's goods and services tax regime in a bid to boost consumption ahead of the festive season. Here's what happened. The GST Council, India's apex decision-making body on GST, have decided to scrap the 12% and the 28% slab. There is a tax slab for 40%, GST as well, but it would be limited to sin or super luxury goods or demerit goods. Finance Minister Nirmala Sitharaman told us exclusively that 100% the GST cuts will move the needle on consumption. India Inc. has, of course, welcomed the GST cuts. However, they have also sought clarifications on several matters. Today, we welcome two top policy makers to clarify on their queries. I am now joined by DP Nagendra Kumar, former member of Central Board of Indirect Taxes and Customs. Also joining me is Sanjay Mangal, Chief Commissioner of CBIC Meerut Zone. Giridhar, Vice President of Federation of Auto Dealers Association. He also joins us. A very warm welcome to all three of you. Let me first begin by going directly to Sai, because he represents the industry of the automakers. What are your queries, Sai? And yes, we have both Sanjay Mangal and DP Nagendra Kumar answering them.
So, thanks a lot first for giving us this opportunity for asking the direct questions from the guys who are mainly in the charge. So my question is simple, sir. As we all know that the country heads into the peak festival season, and you'll all agree that glitch-free implementation will be the key to ensuring the benefit seamlessly reaches customers. And while GST 2.0 subsumes the earlier compensation cess regime for automobiles, dealer today holds a significant, validly availed compensation cess balances in their electronic credit ledgers. Without a transitional pathway, credit risk lasting, creating an unintended permanent loss and sharp working capital shock for all of us. Sir, you will agree that ITC availed under Section 16 of the CGST Act constitutes a vested right protected by the legal precedents, and more so, the GST framework is designed for seamless flow of credit. Lasping of cess balances would contradict this fundamental principle. And even at the time of the introduction of GST, the transitional credit for excise, service tax, VAT were permitted under section, if I'm not wrong, 140. A similar mechanism is justified for the cess leaved under the GST. So our prayer is simple, our question is simple. As on day, the press note and the FAQs which have been released by the ministry, they don't talk about any treatment on the compensation cess for automobile dealers. So it's a request from our side that whatever the balance is there as on 21st of September 2025 may be allowed to be transferred to either IGST or CGST, and such balances may be utilized to discharge the liability against GST.
I would like DP Nagendra Kumar to first answer this. What should the auto industry do to the balances that will remain in the compensation cess account, because that can be set off only in terms of compensation cess? So what should they do?
Ma'am, I'd just like to add one more thing out here. This amount which I'm referring to, it is a substantial amount of working capital of dealers across India. And I don't think under any circumstances anyone can risk for lapsing or probably ignoring or forfeiting this amount.
Yeah, I think thanks, Timsy, for having me.
What should they do?
Yeah, thanks, Mr. Timsy, for having me in this panel. I think, as you rightly said, I think the compensation cess was levied for purpose of compensating the states who otherwise would have not met with the assured revenue growth rate at the time of introduction of GST. And it had a life of about 5 years, which culminated on 30th June. The cess which continued to be collected is only towards the repayment obligations of the loan taken by the central government, and including the interest obligations. Now, when we are transitioning the cess into the basic rate of GST, I think the cess becomes extinct. Now the question comes with regard to what happens to the compensation cess which remains in the electronic credit ledger insofar as the automobile manufacturers are concerned, or the suppliers. Now, while the industry is facing with a huge challenge in terms of liquidating this compensation cess, but the fact of the matter which we all have to appreciate is this: a tax which is levied under a specific dispensation called the Goods and Service Tax Compensation Cess Act 2017 could be set off against only an output cess, and it couldn't have been set off against a CGST or SGST or IGST, for the reason that it is actually the revenue on the compensation cess went to those states which actually required this compensation. There were many states who were not part of the compensation drawing states, and so also the center. So if today this compensation cess has to be allowed to be set off against those taxes, I think the governments which did not receive the credit tax could not be asked to set off this credit for the purpose of their revenue. While this is basically from a point of view of the government, I must also agree with the colleague from the industry that compensation cess constituted substantial in terms of the payment obligations, because we have compensation cess ranging from 3% to 22%. Now, in automobiles, and particularly those automobiles other than EV sector, had a compensation cess ranging from 17% onwards. So obviously, I think the cess which is going to remain on the stock, on the inventory, is going to be a challenge for the industry. Not only at the manufacturer's level, many a times the inventory moved to the stockists or the dealers until the point of retail. The goods which have already been cleared on payment of basic tax as well as the compensation remains a cash flow problem for them. Yeah.
Mr. Mangal, now let me come to you and ask you another query. This comes from Varun Berry, who's Executive Vice Chairman and Managing Director and CEO at Britannia. He has asked that if there are any additional areas that could be looked at in this GST overhaul, one would be the inverted tax structure on inputs, where some rationalization has already happened, but the impact still needs to be assessed. And the second is around GST-linked state incentives. Since the GST rate now at 5% and state GST will be at 2.5%, he says that they would request the state government to give them a longer time to utilize the incentives that have been given to the industry. What would you like to say to that?
Thanks, Timsy, for the question. I would like to first clarify that number of inverted structure positions have been changed and have been rectified by GST Council in this particular reform, including in textile, including in fertilizer, etc. But as you know, there are a number of inputs which are common in nature and which can be used by any industry. So it will become very difficult to totally remove inverted supply. And to take care of that, government has already announced in these reforms that they will also be processing the refunds of inverted duty structure very fast. 90% of provisional refund for inverted duty structure will be given within 7 days. So this will be a big relief for all those industries where inverted structure is there. But it is true that it is very difficult to totally remove inverted duty structure. As regards your second question, for extending the times for state incentives, I think that was out of purview of GST Council and also of the central government. So any such request which pertains to particular state and the particular incentive scheme being generated by or being run by any state, the request has to go to that particular state only. Thank you.
So state incentives, as Mr. Mangal said, are totally different from GST's purview. They do not come under the GST mandate. Thus, Centre or the GST Council may not be able to answer those. But yes, when it comes to inversion, many inversions will continue. So that could be a bothering point for the industry, to be precise. For example, another related query, sir, over here. A lot of input services are at 18%, such as works contract services, marketing services, etc. And that is where the industry feels that they might not get the benefit of ITC in case the finished product is currently now under 5% or even in the exempt category. What about those? Because on goods, we understand inversion can be given a refund, but what happens in the exempt category? What happens when inversion is caused due to services? Mr. Nagendra Kumar?
Timsy, I think insofar as the inverted duty refunds are concerned, the current GST law provisions provide for mitigating the incidence of higher input tax on the raw materials going into the finished product, etc., by a formula option. Insofar as the services are concerned, I think the formula was amended somewhere in the year 2022, pursuant to a Supreme Court direction where we said in proportion to the receipt of the input services, the refund formula will accordingly provide for taking into consideration the refund mechanism. But that has fallen short of the expectation of the industry in the sense that equal treatment with regard to the inputs and the way in the input services could be looked into while formulating the formula so that the complete relief is given. This request is still pending before the government, but what we look at from the point of view of the industry is this. Actually, inverted duty structure basically is a mechanism by which, for the reasons what I think Mr. Sanjay Mangal has correctly said, there can be multi-use materials. So reducing the rate of tax quite often will not be a solution. So therefore, this will have to be lived with, and inverted duty refund will definitely provide that relief. We need to look at exactly how the government will examine this request, because inputs becoming cheaper is going to increase the instances where the inverted duty refund could be filed with the government, and how it's going to be responded, we need to look and watch. Certainly, the industry has a case in point to that. In case of inversion, the refund formula, which currently takes adequately the inputs but not adequately the input services, need to be addressed. Thank you.
Mr. Mangal, any response from your side? Do you think these inversions can be dealt with? Because industry definitely is not liking it.
Timsy, I will like to just supplement Mr. Nagendra Kumar in that presently the refund of inverted duty structure is not allowed in case of in cases where the inversion is in respect of a output output services. It is only in relation to the cases where the inversion is due to a rate of inputs being higher than rate of outputs. The formula was amended, but that does not resolve the issue which you have raised, that where the suppliers are suppliers of services, and they have got some services which are having higher rates, and they are not able to get refund out of it. This was a conscious decision of GST Council at a time, because in cases of services, generally there is always inversion. The reason being that there is at least one or two services which are at higher rate because of the common nature of such services. And at that time, it was considered that if it is allowed for services also, then it will lead to such refund in each and every case. But the demand of industry is also appears to be quite relevant, and at this stage it was not considered. But maybe there is a time in future when the council is considerate enough of these requests and take a fresh view about inverted refund on services also.
Well, we'll slip into a short break now and we'll come back on these industry queries. We have the government representatives answering those live for us. And yes, a lot more on the other side. We are back with our GST helpline. We are joined by Sanjay Mangal, DP Nagendra Kumar, former member CBIC, Sanjay Mangal, Chief Commissioner CBIC. A very warm welcome to the show again, sir. Another query, and this time it is from the health sector, the services side. The query is that there is a clarity on beauty services, but what qualifies as physical well-being services? Does it mean the consultation fees charged by the doctor will be now reduced from current 18% to 5%? A very interesting query, that, sir. Mr. Mangal, if you could answer that.
Timsy, right now, I am not able to understand the query properly because presently all the doctor consultancy services, they are under medical services and they are under exempt category. So which particular doctor advisory services the question is seeking response, I don't know. But in general, the well-being services are services related to all these things like spas, gyms, yoga centers, fitness centers, etc., which are there and which are covered under these wellness services.
So a definite answer would be that all doctor consultation fees are without any GST. So that's a clarity coming in. Next question, this time for the common man and from the FMCG space. Wheat retail packs have GST at 5%. GST on loose wheat or the 25 kg plus pack is nil. Also, while chapati and paratha is now at 0%, does this mean that the packaged wheat or the wheat flour in less than 25 kg packs are now at 5%? What is the new rate that will kick in from 22nd of September? Mr. Mangal, again coming to you, since you were part of the TRU which was setting the rates, what would be your interpretation?
Timsy, there is no change in rate of such wheat, packaged wheat, which is in packs less than 25 kg, and it continues to be at 5% only. So there is no change in that. The breads, etc., they are exempted, and all the loose wheat as well as the loose atta, loose wheat, as well as packed in the packs more than 25 kg, they are under exempt category. But otherwise, packs with less than 25 kg, they are under 5% category.
So less than 25 kg packs continue to be at 5%. And that was the stated stand even today, and that continues after the rate rationalization. Coming back to Sai, because Sai seems to be having some more questions from the auto sector, and he's seeking a definitive answer on what happens to the cess amount. Will they be allowed to set it off in any other account or not? Mr. Mangal, first, a clarity on that, and then we get back to Sai to ask other questions.
About the cess, although Mr. Nagendra Kumar has spoken in detail, as per the present provisions, as per the present legal positions, the compensation cess, input credit of compensation cess can be used only for payment of compensation cess. So even if you do not take this particular reform, compensation cess was supposed to end on a particular date when all the compensation to states had been given after 5 years, but then it was extended for a certain period by GST Council for ensuring that all the loans as well as interest on loans for discharge of liability of compensation cess is paid fully. So considering that this period of compensation cess was increased, now when a decision has been taken to subsume after completion of this period, they have decided to subsume it within the CGST, SGST or IGST, except for certain items for which it will still continue, like pan masala, cigarettes, etc., till the time all the liabilities are discharged. So this had to come, and at that time, whenever it had to come, whatever was the balance in cess credit ledger, it could not be utilized for any other purpose other than payment of liability for compensation cess only. So present position is that the balance which will be lying in the ledger as on 22nd September on account of compensation cess, that will not be able to be used for CGST, SGST or IGST. And there is presently no provision for transition or refund of such compensation cess to any other account.
Sai, I'm sure now you have a definitive answer from Mr. Mangal from CBIC. Coming to my last question. Yes, Sai, please go ahead.
We know the legal provision, but the only ask or the only question was that, see, the dealers had discharged the cess as on inward supplies with a legitimate expectation of utilization. Now, today, any denial of that amount, because that's the credit balance of the dealers, the stock which is lying with us, because if it doesn't happen, as you rightly say, that it will not happen, then probably the transition of the benefit of the lower GST would probably be not there on the cost of the vehicles, because ultimately that cost has to be recovered through some way or means to other.
Sai, I'm grateful, and I'm sure that your ask has reached the right corners, the right ears. And if there is a change in the legal position, I'm sure the government will come out with clarity. But as of now, that's the legal position. That's the place where we would like to wrap up this show now, because we'll have more such queries coming in. And yes, furthermore, more such helpline shows will be part of our programming later on. But yes, as of now, thank you, Sanjay Mangal. Thank you, DP Nagendra Kumar. And thank you, Sai Giridhar, for being a part of this show. And as clarified by the Finance Minister, 100% is what she said, that these reforms will get the consumption boost to the economy back. That was GST Centimeter. Many thanks, gentlemen, for being a part of this show.